Good afternoon, YouTube. This is Jason, aka Bit Junkie. Hope this video finds you doing well. It's Monday, January 15th, and I should probably start by apologizing. I by far treat the traders that watch the channel the worst. I kind of talked about starting doing trading videos a couple weeks back, and it took me forever to pick software that I like to use. And then I promised you a trading video on Saturday, and it's Monday, and I'm just now creating it. I ran into some complications over the weekend, so I apologize for that. I did announce it within the group and on my Twitter, but if you don't follow either of those, then you aren't aware why I didn't produce the video. So here it is today. We'll do it. And before we get started, that's my partner on the left, Jim Cohan. He's on the left coast, and that's me on the right, also on the right coast. And this is CryptUnite Global. It's a cryptocurrency community. Like-minded people come together, talking crypto, sharing experiences, showing ways that we're profiting from the market. And we're going to create something, I think, special for the traders within there. I don't know if it will end up being a Discord group or whatever, but we're going to need more up-to-the-minute, fast alert system so people can really know what's going on with the market and we can talk about it. So hopefully we'll get to that in the future. I probably need to talk to Jim and see what we're going to do. But yeah, so we're going to do a trading video here today. I didn't really know exactly how to make this video because I could just show my trading strategy, but I forget that I've got a ton of hours into trading, and I take for granted some things that people that are going to watch this video that are very, I guess, foundational that you're going to need to know before you can make any of the rest of it make sense. And at the end of it, my trading strategy looks very simple, but it's based on, a relatively complex set of foundational rules, that at the end result looks simple, but if you don't understand the foundation beneath it, then it's not going to make a lot of sense. So I'm probably going to have to start kind of sort of from the beginning, and I figured that's the way that I would approach this. See the response in the comment section and the messages, see what you guys really need, and then we'll go from there. And I don't know if that's the right format, but that's what we're going to do, and we'll just see how it goes, okay? If you look at the bottom of your screen, you should have like a section where you can input your credit card to make payment for this video. I added the awkward pause so that you would have an awkward pause. I'm joking, guys. All right, so we're going to get started on the video. All right, let's see. Bitcoin's recovering. Looks okay so far. I mean, we're at 1,400. What I'm going to do with this video, I hope you guys aren't still mad at me for my joke just a second ago. I'm just joking. Everything's free. All right. I'm not going to use the Coinigi. I don't know how you pronounce this. I'm assuming it's Coinigi or something like that. I'm not going to use this chart because I move more fluidly and quicker on a MetaTrader chart. But one thing that you'll, kind of come to realize when it comes to the core principles of trading, it doesn't really matter which chart you're looking at because it's about the psychology of the market and price, and that stretches across any type of market. All right. And there are markets that have their nuances and everything like that, of course. Like, for example, you can trade volumes in stocks because you can get that reading. If you're trading foreign exchange, good luck trading volumes. You'd have to use candlesticks to determine your volume or, maybe some type of moving average for the day or something like that, or daily range. So, there's differences like that. But for the most part, they're all the same. So I wrote a how to trade booklet probably around 2010, and I was a part of a forum. It was a foreign exchange forum, and I was on there giving advice and talking to the people, and I wrote a little book, and it was maybe 8 or 9 pages long. That book would have been very helpful right now. I couldn't find it. It was on like 2 computers ago for me, maybe 3 computers ago, and I don't have a file of that little mini course that I wrote. And to boast on myself for a little bit, I think there was like 2 guys that told me that they traded multi-million-dollar funds based on my course. So I felt pretty good about that. But let me see what I did is I kind of just wrote, you guys know how I do. I like to pull out a word chart and just create something generic. And that's what I've done here. So we're just going to get to it. Trading. All right. So it's difficult. All right. For everybody that doesn't know, it's very, very, very difficult. All right. And it's not hard to do one thing at a time. It's hard to be consistent. All right. So, and by my definition, the key in trading is to manifest to the best of your ability what you see in the chart into a real world application, which means the lines and bars and levels, they mean something to the human psyche. Markets are driven by fear and greed, right? So people exiting positions most of the time are doing it either because they're scared that it's going to keep going in the wrong direction, or to take the profits off the table, you know? And what you have to do is find a way to balance the fear greed component with a strong money making, or I'm sorry, a strong money management system, you know, encompassed around a successful trading strategy. All right. So that's the thing. You need a winning strategy and good money management. Money management is super key. This is the thing that I think most people miss when they trade, is the money management. Okay. So again, this is not a very structured way to do it, but I'm just going to go through this the best of my ability, and the next video should be better because I'll have feedback into what you really want to know. Because if I just dive into charts, I think I'm going to lose half of everybody. Okay. All right. So here are the tools that I use. Now, you're going to notice that I don't have any indicators on here, like, third party indicators. And there's a reason for that. All right. But we'll talk about it. All right, so the first thing you need is candlesticks. I think candlesticks give you a lot more information than bar charts do. Steve Nissen is the leading authority on candlesticks. He's the one that brought candlesticks to the Western world. All right, and you can YouTube him. Back when I first started trading, I stalked Steve Nissen. I used to watch everything he ever made, and I had every book. And it's really good information. So let's go to, we can use the coin chart here. So these are candlesticks. All right, let me see if I can zoom in. How do you zoom in? See, I'm not good with these charts. Let's go to the MetaTrader chart. All right. So a candlestick, the way it works. Now the colors can vary depending on the trading platform, right? But basically, a candle is great because it gives you opening, closing, and then also the momentum, because you can see the size of it. So right here, where my crosshairs are, the bar at the bottom is where the opening price was. Where it stops here is the closing price. The little lines at the top and the bottom are called the shadows, and that basically shows you the range at which price traded in within the time frame. So this is a daily chart, which means each one of these bars represents one day, right? So this is an upward move right here on this candle. So what this shows you between this one and this one is the market started here and it closed here. So you had a very small movement, and it'll tell you right here what the open, close, high, and low were, right? But on this next candle, it opened where this one closed, and it closed significantly higher with really small shadows, which means that whole day it basically fired upward. Okay. And the shadows are telling because the shadows show you indecision in the market. The only reason you have indecision in the market is when prices push really, really high and there's someone there on the other side pushing it back down. And then the result of that is a shadow. So you can learn a lot of information by just studying what candles mean. This is almost a full engulfing pattern, which tells you something. There's a doji right here, which tells you something. And all of this stuff means something. So it's not just looking at this chart and saying, oh, okay, price went up and price went down. Every single candlestick tells a story. So I would advise people that are getting into trading to start by understanding what these candles mean, because you get a lot of information by understanding what's going on with the candles. All right. So that's a good place to start. So candlesticks are important. Fractals, we're not going to get into fractals. I put that on there, but let's not talk fractals today, right now. Support and resistance. That's another big one. All right. Now I think I can use the clearer chart for that. All right. So the thing about trading, and this is probably the most difficult part, and I was going to get to this when we get down to the actual strategy, but it's all about perspective. And this ties kind of into fractals. You need to know the chart that you're looking at, where it falls into the grand scheme of price. Okay. So support resistance levels, for example, let's go down to a 5-minute chart. A 5-minute chart looks the exact same as a 1 hour chart or a 1 day chart or a 1 week chart. And you see here's support here. Price went down to this level. It couldn't close there. Price went down there again, created a shadow. It didn't close there. Price went down. It closed there. It went down again and created, I forget what that that pattern's called, but basically, so you have some support here, right? And then price went up. The problem with this on a 5-minute chart, this support is not important because it's trumped on a longer time frame chart, right? Because price changes throughout the day. So this support held up for however many bars this is, 45 or 50 minutes, but it eventually fell right here when price dropped below it. And so you always, when you're trading your chart, you have to be able to identify where you are in the bigger scope of things. And I'll show you an example of how I set up my chart. And I developed my thought process became you create a roadmap for price, but you do it with a top-down analysis. So you start with the highest level charts and you find out where the key areas are. And you don't have to look at those areas every day because they'll be plotted there, and the market may not revisit that area for weeks or months at a time. But you need to know where all the key areas are, and then you're going to find the most profitable sections to get into the market and avoiding the key levels, in between the key levels, okay? And you need things that are dynamic to do this, and it's very difficult to do. And I don't really have a right way to explain this to you guys. I think it would take me, I don't know, maybe 20 videos of trying to really get this all together. And I'm trying to condense it down, and I'm probably not doing a good job, but let's continue. All right. So support and resistance basically are areas in the market or prices in the market where price stops or it stops. And once it penetrates it, sometimes what used to be resistance becomes support. So if price won't go over, let's look at a chart. I'm sorry, guys. I'm going to have to keep defaulting to the MetaTrader chart because I'm more comfortable this way. So I hope you guys can read it okay. All right. So an example of this would be, let's see if we can find something here. I've got the chart live. All right. So this is a daily chart and you've got price came down to this area. Okay. If you were to take a line and put it here on this day, this could be a support level, and a lot of times you'll grab the two closest ones and you can create a support zone. Now I use Fibonacci to actually measure where it should be, so that's a little bit more pinpoint. But for this example, so this is how you translate this into the real world. So price went up to this level on this date, and each one of these represent 1 day. So it ultimately fell all the way down here. All right. There's a lot of resistance to it staying down here because you can see how long this shadow is. You know, people resisted this. All right. So price went down there, and here you would drew your support line down here. All right. Price came back down to the area. It didn't make it all the way back down, but it's in that zone. Okay. So it tried it again, meandered around here again, and then eventually it went up. Okay. And then look, I don't know how much later this is. This is around January 15th. This low was put in September. So you're talking, 3 or 4 months apart. This support level is still holding. All right. So support and resistance are basically just key levels where price wouldn't go any further. And there's always macroeconomics as well as technical reasons why the market stopped at those points. But what I found over years is it's not really as important to know the reason that the macros played out that way, that price stopped there, because the macros and the fundamentals are built into the price action. You just need to know it stopped there and it wouldn't go any further. And you can use that to put yourself into another trade using probability based on the market's performance. But support and resistance, the higher the time frame, the more substantial that area becomes. Okay, if that makes sense. All right, so let's go. Where are we at here? All right, so I like dynamic tools. Okay, the two most important tools. I mean, now candlesticks are, they're just a way of life. You always want to use those. Support and resistance, also kind of a way of life. You're always looking at highs and lows of price. But the dynamic tools that I use are Tom DeMark trend lines, specifically Tom DeMark, and you can Google him, and Fibonacci retracements. All right, two most important tools in my toolbox, and this is where it's kind of fun for me. All right, price is unbelievably predictable at certain points. This is a very random section of the page. Okay, let's start with Tom DeMark trend lines. If I ask any one of you watching this video to draw, let's focus on this section right here, okay, where I'm circling right here. If I ask anyone to draw a trend line, I may get someone that does this. I may get somebody that does, let's see. You may do this. You may do this. You may do this. You may do this. If you ask anyone to draw a trend line, it's like pizza. You know, you can't get two people to agree on any two toppings. There's too much subjectivity in the way that people draw trend lines. Tom DeMark has clearly defined his lines, which he calls supply lines and demand lines. So basically a demand line is going to be a downward direction. That would be this. This would be a demand line. And the reason this is a demand line is it means that there was more, hold on, I might have that backwards. This would be a supply line, I'm sorry. When supply outpaces demand, then the direction is down, right? Slide this over. So when supply outpaces demand, the direction is down. So this would be a supply line. And then demand's the opposite. When demand outpaces supply, that would be an uptrend line. All right, so the reason, you can do your research on the wording behind it and what it means, but the key about it is that Tom DeMark trend lines are completely objective. So if I'm going to draw a trend line and I'm going to show a demand line, okay, which means it's going up. If I pick this spot right here, or actually let's start here. If this low right here, this is called a swing low. I probably should have put that on my sheet. Swing lows are points where the market goes up or down, it stops, and then it swings the other direction. Okay, so there's a swing high, there's a swing low, there's a swing high, there's a swing low, there's a swing high, and a swing high or swing low is defined by a high point here and then a lower point on both sides. Okay, and inversely, going the other way, it would be a low point with a higher closing on each side. Okay, it's very important. So when you're drawing Tom DeMark lines, the swing low here connects to the. Okay, so if you're looking at, I'm doing this backwards. I'm sorry, guys, but all right. So if we're looking at this swing right here, this swing low here, to get the line, you go to this swing low and then you go to the previous swing low that's lower than this one was, which is right there. Okay, so if I'm looking, let's go over here a little bit. I'm gonna come back, because I picked a random spot, but I want to show you that it can work anywhere. All right, so if we're looking at this swing low right here, we're gonna go to the previous swing low that's lower than this one, which will be right here. And you put your dot right on there. Okay. Let's do another one. Here's a swing low right here. So the previous lower one is right here. What this does, and okay, let's do swing highs too. We don't want to just do the supply lines. Let's do the demand lines. Let's do the supply line too. So that works this way. So let's say this is a swing high right here. Sorry, did that wrong. Let's say it's this swing high right here. The next highest one, the previous highest one is right there. And that's where you always draw your trend line. Okay, so that would be the same one for this one. It would be the same one for this one, right? Because if you do this, you're doing the wrong kind of line. So that's how it works. And the reason it's powerful is because it's dynamic. So it's not one of those things where as the chart changes, 50 different people would draw it 50 different ways. You have an exact rule of what you should be doing. So if you're looking at this swing low right here, you go to the previous swing low, and that's your line. There's no ambiguity to it. It's a fact, all right, of how it works. So why is that important? These lines are the single best thing that tell you what the current direction of price is that I've seen. You can try and read the candlesticks to do it, but there's nothing that is more accurate in telling you the actual direction of the market than when price penetrates one of these lines. Okay? And I'm going to give you an example right now. All right. So the market came down in this section we first started looking at. The market came down, and if you were to put a line here, here's your break. All right. So this is the swing low. Here's the previous lower one, which means this is an upward trend. You see that the angle of this line is up, right? Price broke through it right there. That's telling you that the direction for the market is down currently. Now, that's not taking into consideration where you are on the road map of price, because remember, there's support and resistance at different levels. And when we start talking about Fibonacci, this is all going to come into scope of how complicated it is. But this tells you true direction right now. And it's right 90% of the time, maybe more. All right. So when the market came down to this point and it created a swing high, actually there's a swing high right here, because this high of this shadow is higher than this point here. Because let's see, the high right there is 24.38.2. The high on this candle, even though it's a bearish candle, was 24.42.8. Okay, so this is actually a higher, I think that's right, 24.44. Yeah, so this is a higher high. So check this out. That's the previous high, and here's the swing high. So the market direction was down. But when price closed on the other side of this line, which changes every time a new swing high or swing low is created, it's telling me right here that the market direction is now up currently. Now, there's support and resistance to deal with, but it tells me the actual direction of the market. So this is where your fractals, or where you are in the position of time, comes into play. All right, so let's say price broke through, I think it was right here, and I start measuring this move. I'm going to show you something this is really hard to do because I'm missing so many points. But Fibonacci is my last tool. All right, Fibonacci retracements. And Fibonacci is important because all it is, I can tell you, there's some information as to why Fibonacci works and how it shows up in all types of different ratios throughout nature. And there's all types of stories behind it. Everything that's on this tool section, please do research on it individually. And you'll have days, if not weeks worth of research on every single individual item. Like I said, I've got 10,000 hours in the market. I kind of bypass a lot of this stuff, but there's solid information on every single topic that you can kind of master that's going to help you in your trading, okay? But price typically never goes up and down. What you'll find is that price, when the direction change happened here, remember we had a trend line going down this way. Price broke through here. When price goes up and it pulls back, typically from the 61 to 78% retracement, somewhere in there, price almost without fail has a reaction at those levels, because that's when the people that think the market should continue to go up jump back in to buy, and that's where you get a reaction. So if you look at price broke through that trend line, I think it was here when we had it, about right there. So we would have drew the Fibonacci down here, followed the price action up to here from the ultimate low. Look what happened. Price came back down. It hit the 61 and 78% retracement, and then the market went back up. Here's the problem with that, though. It works both ways, because this move down, for example, see the 61% retracement? Look what price did when it got there from this move down. This is where knowing where you fit within the time scope comes into play. The market changed to up here, but the market could still actually be down, because this up move could just be a pullback for this to further go down once it got to this 61. And once you start looking at multiple time frames, it gets really difficult to figure out where you are in the roadmap. You might be on the wrong side of the equation, but you look at how price reacts, and it's once you get this tool out and start going through here, it can drive you insane as you start looking at it. You know, look at this, 61% retracement, right? We can go to a smaller section of it. Look at this one, small section of it, 61 to 78% retracement. Let's go here. Where's that? Do we need to zoom in some? Look where price stopped. 61% retracement. That's how the market works. When the market turned and when it started going down, look where price stopped. 78, 61 retracement. You can go through this chart and it's everywhere. And the problem is you have to figure out what the direction of the market is to determine which measurement you should be using. There's no way I'll be able to get to it on this video. We have to build. You could think of this as having to build a skyscraper, and we're just now sticking a shovel into the dirt to dig a 50-foot footer, you know, to build the foundation to the skyscraper. There's no way to get to all that on this video. But this is the essence. I guess we're going to give you homework. This is the essence of what we're trying to do. You're looking at candlesticks to determine how the market is moving. You're identifying support and resistance areas on your charts. You want to really learn how to plot time to mark trend lines, because they're dynamic, and you need something that's completely dynamic and objective. You don't want stuff that you can change at any given moment. If I asked you to draw this, so this is the pound dollar pair, and this is a live chart, okay? And this is the daily chart. So let's look at where price is. So here's your trend line break to the downside, right? It happened on this candle right here. Which means if I'm trading this, sorry, I'm having some problems with my mouse. Okay. If I'm trading this, I'll explain later why I'm using a particular point. I would go to the most recent swing high that caused price to punch through that demand line. That's what I use to measure, okay? But what I'm going to show you is, you're like, okay, well, you would have lost this trade. Well, not necessarily. This is the daily chart. Let's go in 4-hour chart and see if we can zoom in. All right. So I would have measured here, right? And look where price, let's zoom in. This is on a 4-hour chart. Price came back up to the 61 here, and it went down and made a lower low. There was profit to be made here before this run up. Okay? So the key is to find, I keep saying this, but this is where fractals come in. You have to find where you fit within the grand scheme of the price map, because you don't want to be on the wrong side, measuring the wrong side, because you know you could have been on the buy side measuring. You know, imagine if I would have measured here, price would have punched right through, right? but I wouldn't have been on that side because the trend line break happened on this side, on the daily chart, which gave me a better perspective of the market. You see, because the daily chart line that would have told me whether to go up and down would still be intact. So this move that happened 3 days ago, 3 days ago, punched through that line. So the direction for this market is currently up. So now we're measuring. Price came down this section, we'd be looking to buy. You notice anything? You see how this line is a support line? I mean a resistance line for the market? Where the 61% retracement is, it's right at the spot where the previous high of this area was. So I don't know if this video is very productive, but it's long, so I guess I'm not going to delete it. But this is the beginning workings of how I trade, okay? Or how I used to trade. I don't trade the markets anymore, full disclosure. I follow them at times. Trading is a time sink. It can take over your life, and I don't trade my time for dollars anymore. But it's probably among the most profitable things on the planet that you can do. And if you know how to do it right, the money is almost limitless. So we'll delve deeper into it in a future video. I don't want to make this too long. Top-down analysis. I swing trade, and risk reward analysis, which would be your position sizing, is very, very important. Okay, so let's look at Bitcoin before I close up this video, and maybe we're gonna have to up this to maybe twice a week to get through it. I really want to see what your questions are to know how deep that I should go, because if not, I'll be writing a 100-page book on these videos. Okay, so let's go to the 1-day chart and look at Bitcoin using the principles that we just talked about. All right, so let me grab a trend line. And let's see. Our current situation, I think that's kind of hard to read, that shadow. I'm just now learning how to use this charting software, so bear with me. 14,973. Okay, so that's actually a swing high here. That goes there. All right, so we've broken above this line. Current market direction is up. And if you want to see to the downside, this was the last swing low. Actually, let me do it this way. That's the one that's in play. So what you'll find is sometimes price will come back and test this line. You know, the swing is here. It's one of these two. I don't know which one it is, but it's one of these. The swing is here, and here's the previous lower swing. So that gives us, you know, basically our demand line. Here was our supply line, or down. We can just call it a downtrend line. So your downtrend line was punctured and closed above here, which changes the market direction to up, which means I would have started measuring from here to there. As a matter of fact, we can do that with Fibonacci. This is hard to read on my small screen. Let's see if we can zoom in once I plot the chart, the fib. So we plot the fib, and can anyone show me how you zoom in? I probably should have figured that out before I started the video, huh? Okay. All right, so that's a lot of information on the screen. It's kind of hard to see. But basically, I think we put the fib on this high, and this 61.8, here's the fib right here. This line where the finger thing is, that's the 61%. That's the 78%. You can see even here, price came down to that level, which was $1,323. And it's shot up $900 from there and gone up to here. So we're currently still in an upward movement or upward direction for the market. Now, there's oscillators that I do use. I'm not saying I don't use any type of indicators. There's oscillators, there's RSI, there's a couple things that can help you along, but they're more confirmation pieces. Everything you need to know is in price action, and using a price ruler, current market direction, candlesticks, and the scope of time, where you fall within the roadmap based on constructing your chart from the top up. You're going to have 90% of everything you need. All right. I'm going to shut this video off because this can make your brain spin. Let me put the paper back up here. Look up candlesticks and Steve Nissen. Learn about support and resistance, time to mark trend lines, and Fibonacci retracements. That's enough information you'll find 10 days worth of information about those, but we're not going to wait 10 days to do the next video. Okay. Come back with some questions in the comment section. And once we get a certain level of understanding of how we attack this, then we can actually pull actual charts and start understanding how the charts work. Now, if you don't want any of this kind of like fundamental information or knowledge that I'm kind of throwing out here, let me know that too, and we can skip all this and just start analyzing charts, which would be a lot easier for me. Okay, because I'm bumbling all over my words and I don't know what I'm doing right now with this charting. But it's the first video, and there's probably only gonna be 20 people that watch it. So luckily for me, it's not gonna be so bad. But that's a good start. Like the video, subscribe to the channel, hit the bell so you get notifications, and join CryptUnite Global. And I have a feeling now that we're probably going to have to make at least 20 charting videos just to get to the point where we can learn and actually do charting. So until next time, I'll talk to you soon. Thanks, guys. Bye.